locally. Perfect. Now, everyone here should have access to their Bamboo. Okay, Bamboo is the platform. Everyone here paid the 199, right? You paid for this platform. Make sure you have access to it. There's a lot of resources you can use on here, even when you're not licensed. Okay. So, one of the resources you can use is the training platform called Quest. All right. You see across the top here, there's different tabs, right? There's home, my agency, new business. You go all the way down here and you see one that says PHP Quest. Okay. You click on that. For anything like me, you have a pop-up blocker on. But if you click on that, it should take you to this website here. And this website, guys, it's our training platform. Now, conceptually, right? You should be able to access this platform. And if you watch these videos, okay, if you watch the videos that are provided here, you should be able to know, how to run your own office. Okay, I can drop you off in the middle of the country. You can learn Quest and learn to open your own office. Okay. So what you're going to do, you're going to go to the licensing course, right? So you're going to click on courses in the top right corner, and it's going to bring you here to the National Licensing Exam Prep. That's the very first class you're going to see there. You're going to click on that, and you're going to click on enroll now or enroll for free, something like that, right? Yeah, enroll for free. I've already done this course, y'all, so I'm going to click on replay course. But if you click on enroll for free, it will take you to this same section, okay? We're going to pick up here. This is where I left off last time. We left off on provisions, okay? Now, this is one of the section. I love this section of the exam. Provisions are awesome. This is like the terms and conditions, like how the policy exactly works. So you will be tested on this section. You won't be tested on the definition of a provision, but you need to know what provisions are within the policy. Okay. And I think y'all can see, yeah, y'all can see my screen. Okay, perfect. Let me move all these menus over. Okay, cool. So jumping into provisions. So provisions, life insurance policy provisions, often referred to as clauses, are the detailed rules and conditions that govern how a life insurance policy functions and how it is administered. Okay, you will not be tested on the definition of a provision, but treat each provision like a definition that you need to know. Okay. Okay. So the entire contract provision, okay, the entire contract provision, this is talking about when you receive your life insurance policy, right? So you've already applied as the client, you've already been approved, okay? Now you're getting the entire contract, right? You get your contract, okay? Now, everything that matters is going to be in writing. Okay, that's what this means. Everything that matters will be in writing. Okay, so it will be in the application or the policy. That together makes up the full agreement. Right? It's a combination of your application plus the contract that they drafted up. That together makes up the full agreement. Okay, so nothing that is spoken about or promised later can be used to change that agreement, right? You can't like write a contract and then later go and make some changes to it verbally, right? You can't say things and just be like, oh, yeah, well, we can do that, but you don't actually write it down, right? If it's not in the contract, it's not going to matter. Okay, so there's an example that says, hey, if the agent promises, Mr. and Mrs. Client, don't worry, you're covered for cancer. If it's not specifically stated in the policy, guess what? That client will not be covered. Okay, so it needs to be in writing in order for it to count. What this does is it protects both the client and the insurance company. Okay, that way no one's blindsided. Everyone knows exactly what's on the table, right? There's no surprises. There's nothing left up to wonder, right? Everything is clearly laid out. Okay, the insuring clause or the insuring agreement. Okay, this is the insurance company's promise to pay the death benefit should the insurer pass away while the policy is active. Okay, it's usually found on the first page of the policy. So it includes who is covered, right? Who is the insured? It will cover that. It includes what the policy actually covers. Okay, it'll say death. It'll say living benefits. It'll include the policy's face amount. right? How much insurance did you sign up for? It'll include that. It'll include the company's commitment to the client. Okay. The insuring clause is the insurance company's promise to pay so long, so long as the policy is active. Okay. The free look period provision. The free look period provision. So the free look period is depending on how old the client is, it's kind of like the free trial. Okay. It's kind of like the free trial. Um, this is the period of time after the client gets their policy delivered to them, and they have time to decide whether or not they would like to keep this policy. Okay. So let's say that the client just got their policy delivered, right? You're an agent, you just delivered your policy, that agent, or I'm sorry, that client's policy to them. Now they have a free trial period where they can say, hey, you know what? I want to think about whether or not I want to keep this policy. Okay. And during that free trial, they can decide, hey, you know what? I want to return it. I don't want it. They can cancel it and get their money back. Okay. Any money that they paid, they can get their money back if they change their mind. Now, how long they get depends on how old they are. Okay. So if you are under the age, if you're 59 and under, okay, you get 10 days to decide if you want to keep this. If you are age 60 or older, you get 30 days. Okay. You get 30 days to decide whether or not you want to keep it. If you choose, you know what, I do not want this policy, and you decide that within those 10 days or those 30 days, depending on your age, you get your money back. Pretty cool, right? Now, if you decide that after, you can still choose to get rid of the policy. However, there's no refund. Okay, so you only get the refund if it happens within the free look period. Okay, the free look period, again, it's either 10 or 30 days of digging into your policy. If you change your mind, you can cancel it, get a refund, and no need to explain. I actually have seen this happen where this client, it was a big policy too. He was paying, I think he was paying like $50,000 a year into the policy once a year, right? So he was only funding it once a year. He was paying $50,000 at one time. Okay. Well, he got the policy, paid the $50,000, and literally within a week, he's like, yeah, I'm not ready for this right now. Let's just cancel for now. Got his money back. It's crazy. And then he ended up getting the policy later. So it wasn't my client, but I've seen it happen. Okay, cool. The consideration clause. Okay, consideration. We've talked about consideration in the past, right? Anytime there's consideration, there's an exchange of value. Okay, consideration is simply value. It's the deal. Okay, the consideration clause is literally the handshake of the policy. This is the deal between you and the insurance company. The exchange of value is what makes the contract legally binding. Okay, so as the insured, okay, you are the client. What kind of value do you bring to the insurance company, right? Well, there's your premium, of course, and your truthful application. Your premium and your truthful application are very valuable to the insurance company, right? For obvious reasons, right? They want your money. And in exchange, the insurance company is going to promise to pay your beneficiaries should you pass away. Okay, so the insured will provide their premium and the truthful application in exchange for a promise to pay your beneficiaries when you pass away. Okay, so an example of how the insurance, or yeah, how the insurance exam will ask is it'll say, what is consideration on the side of the insured? Right, and it'll give you options, and one of those options will say the application and the premium. Right, so the insured will say, here's my application, my money, right? So your honesty and your money are of value to them. And the insurance company will say, hey, no problem. Here is our promise to pay in the future. Okay, the grace period provision. I don't know what a grace period is, right? I remember I used to come home sometimes where I used to live. And before, my Wi-Fi was not included in my rent. It was like a separate charge. And I would come home, and sometimes I would just forget to pay my Wi-Fi, y'all. And I would come home and like nothing's on, nothing's working, right? My grace period was over. Now the grace period It's that time between when your bill is due and the time they're going to turn off your service, right? Same thing applies to insurance. Okay, the grace period is a time when an insured can still pay their premium late and get coverage. Okay, this usually lasts anywhere between 30 to 31 days, depending on the company. Okay, now your policy remains active during this time. It remains active during this time. Now, if you die during the grace period, the company will still pay out the death benefit. Okay, so if you pass away and you have not paid your bill, but your policy is still active, that policy will be paid out. Okay, the insurance company will just deduct the amount that's unpaid from your death benefit. So, for example, if you have a $100,000 death benefit, okay, and you maybe forgot to pay it, but now you've passed away, that $100,000 death benefit's going to get issued minus that premium you owed. Maybe you owed $100, no problem. They're going to take it out of your death benefit and send the rest to your beneficiaries. Now, if you do not pay this policy, if you do not pay this policy in the time during the grace period, this policy will lapse. I've also seen this happen. It's very unfortunate. Now, a lapse is where there is no longer coverage. There's no longer coverage and this policy will not pay out. So I've seen this happen. There's an agent in our office who comes to me one day. He says, I need your help. He goes, my mom passed away and the insurance company is not trying to pay this policy out. Okay, now this client or this agent, he's not a client. This was an agent in the office. He, oh,
Copy. Yeah.
make sure your body's muted there. His mom had had this policy for 27 years. Obviously not my client. I'm not even 27 years old, right? No, I'm kidding. But this lady had bought this policy literally 27 years prior, okay? And she was going through some health issues, ended up in the hospital, was hospitalized for several weeks. She gets out of the hospital, and the first thing she does is she calls the insurance company. She's like, "Hey, I know I need to pay my policy. How much do I owe?" They said, "Hey, you actually need to pay it by this date. If you don't pay it by this date, you will no longer have coverage." She says, "Okay, no problem." She goes to try to make a payment, right? Ends up going to the hospital that same night. Okay, ends up being hospitalized that same night, ends up passing away before a payment could be made. All right. Guess what? Her policy lapsed literally the day before she passed away. And even though she had paid this policy faithfully for 27 years, this policy didn't pay out. We wrote letters, we called the company, we did all kinds of things, weren't able to get it paid out. So you can be a faithful client for years, religiously pay your stuff, and still not get a policy paid out if it's in the lapse. Okay. So make sure your clients are paying their policy, y'all. You guys can see it on your end. You can see when a client does pay, when they don't pay. So just make sure you stay on top of that. Okay, cool. A reinstatement provision. What do you do if a client's policy does lapse? Do you have options? Can you make it up, right? Can you fix it? You absolutely can. You can get your client to still get coverage or still fix their policy or what's called a reinstatement if it lapses. Okay, so here's how you do it. If insurance policy lapses because you didn't pay it, you can bring it back without having to start over. Okay, there are some rules to this though. You have to apply within the allowed time frame. It's typically between 3 to 5 years. Okay, you get anywhere between 3 to 5 years, depending on the company, to reinstate a policy. Okay, that's rule number one. The second rule is you got to pay back all the past due premiums. Okay, so if you owe money from, I don't know, 2 years ago, you got to pay those 2 years worth of premiums. Got to pay it, okay? Plus the interest. There we go. And you have to provide proof of insurability. So this may require you to complete a medical exam or provide evidence that you're still healthy. Um, but it makes sense for some people, y'all. So imagine you have a policy for 15 years, right? If you have a policy for 15 years and then you let it lapse for 2 months. Okay, it lapses for 2 months and you try to go get a new policy. Well, it's going to be a lot more expensive 15 years later, right? It's probably easier to just pay back what you owe and reinstate the policy that you currently have than to get a whole new policy, right? So the benefit of this is that you keep your original policy, the price, and the coverage instead of having to get an entirely new policy, which would end up costing you more because it would be based on your new age at the time of application. Okay, incontestability. Okay, the incontestability clause. This right here talks about a period of time when the insurance company can deny your claim. All right, the insurance company can deny your claim if they discover that there is inaccurate information, if there are omissions or lies on your application. Okay, if you left something off your application or you misstated information, the insurance company has the right to void your contract. Trust me, I've seen this. 8 years is a lot of time for me to see a lot of these things happen, and it does, y'all. Okay, so this can only happen within the first 2 years of a policy. After that, the insurance company cannot void or deny a claim because of misstatements on the application. It becomes incontestable. Okay, but during those first 2 years, it is very much contestable. It's crazy. So I remember this was 2020 and a client had passed away. Make sure I hear my voice. Somebody's unmuted. Hold on. This was not my client. Okay, this is somebody else's client, but this client had passed away. And we said, okay, well, this is, and it was my sidelines, someone on my sidelines team, right? So she's like, can you help me? I said, well, let's figure this out, right? So we called National Life Group, we filed a claim, and National Life Group said, yeah, we'll send out the paperwork, right? So what happens is when a client passes away, guys, you will be sent a packet where you have to file the claim, right? You file, they're going to ask a bunch of questions, especially if this happens. This will happen if the client dies within the first 2 years of the policy. You have to fill out an agent report. My camera is tripping, y'all. I'm going to turn it off. There we go. So you're going to fill out an agent report. Okay. In that agent report, it's going to ask you all kinds of questions. Okay. Aside from the agent report, the client or the beneficiary is also going to get a report, right? They're going to fill that out. Part of that report is the insurance company saying, "Hey, we need a copy of the death certificate. How did this client pass away?" All right, this client passed away in December of 2020. This policy that the client signed up for was only issued to her the month prior. Okay, she had only had insurance not even for 30 days. Isn't that crazy? She didn't even have insurance for 30 days when she passed away. That definitely raised red flags with the insurance company. They said, this is interesting. Yeah, we need that death certificate before we can file this or before we can pay this claim out, right? No problem. The family sent in the death certificate. Guess what was listed on the death certificate, y'all? This death certificate mentioned that this client, what's my battery at? Oh, I need to plug my computer in. We're good. This death certificate mentioned that this client had passed away due to kidney failure. Guys, National Life Group had no idea that this client even had kidney failure. The client had failed to disclose that she was actually on dialysis for the past 7 years. Now, had National Life Group known that this client was on dialysis, they would not have issued this policy. Okay, so they said, hey, because you did not provide us all the information, we're going to cancel your policy. Okay, so even though she had already passed away, her policy was canceled and she was refunded $38. Her bank account was refunded $38 instead of her family getting paid out the $100,000 they were expecting. Okay, so the incontestability clause says that after 2 years, the insurance company cannot cancel policies like that unless it's intentionally fraud, right? Um, but yeah, guys, very important that your clients provide you all of their medical history. Even for us, guys, like I know it's hard. Sometimes we want to insure our family, we want to insure our friends. It's not worth it to lie to the insurance company because they will find out and they will terminate you. That agent who wrote that policy was actually the client's daughter. She knew her mom had medical issues, right? She knew her mom had medical issues. So her policy ended up getting canceled. The agent ended up getting terminated. Nobody wins here, right? Nobody wins when a client lies. So even if it's somebody you love, care about, don't do it. It's not worth it, y'all. All right. Okay. Now, what happens if you accidentally misstate some information, right? Maybe you're not intentionally trying to defraud the insurance company, and it's a simple mistake that doesn't really impact whether or not they would get coverage, right? Something like a misstatement of age or gender. Okay. So if the insured gives the wrong age or the wrong gender on the application, whether accidentally or intentionally, okay, the insurance company is going to adjust the death benefit to match what the premium paid should have purchased. Okay, so they'll just change your death benefit based off of how much you're paying, right? And they'll adjust it based off of your correct age or your correct gender. Now, the policy is not going to get canceled, it's just going to get corrected. Okay, so if the insured says that they're younger than they actually are, the insurance company is going to decrease their death benefit. But if the insurance company finds that the client is actually older than what they claim to be, the insurance company will give more of a death benefit. Now, if you happen to, like this happened to me, this was a mistake that I made even filling out an application. I accidentally clicked male on a female client. And it's a simple mistake. Like it's a drop-down menu and I clicked the wrong one. And the policy got issued. Nobody questioned it. The underwriter didn't notice it. And it was very clearly a woman. Her name, I think, was like Maria. And it was a man that I put a man on the application, but it was a woman. Policy got issued. And it wasn't until the policy got delivered to me that I was like, wait, why does it say male? And I looked and I'm like, wait, this was my fault. I messed up. So it was just a matter of contacting the insurance company and saying, hey, I made a mistake. They said, no problem. We'll reissue the policy with the correct gender. And they just fixed it and sent it to us. It wasn't a big deal. So little mistakes like that, little issues like that, they're not gonna, get the client in trouble. They're not gonna fire you. It's just a matter of correcting it. So intentional lies will get you in trouble. Mistakes will not. Okay, the policy loan provision. Okay, if you have cash value in your policy, so if you have a permanent policy, okay, and it's building savings, you can actually borrow money from it. It's kind of like taking a loan out from yourself. This is not the same as withdrawing money from a policy. This is a loan. Okay, this loan is not a loan you have to qualify for or get approved for. Okay, this is your money. You're just borrowing it from your account. Now, you do pay interest on this loan. Okay, and the loan amount cannot exceed the amount that you have in the account, right? That doesn't make sense. You can't take out more than what you have. Now, if you don't pay this loan back, what happens is when you pass away, they will subtract what you owe them from the death benefit before they pay it to your beneficiaries. Okay, if you take a loan out from your policy, you'll owe interest, and it'll come out of the money that is supposed to pay out to your beneficiaries if you don't pay it back in time. Now, remember, loans are temporary. They're not taxable, just like any loan, right? And the cash value actually stays in your policy. You just owe interest. Okay, a withdrawal is very, very different. A withdrawal is permanent. It's going to be taxed. And because you're making a withdrawal, it will actually come out of your account and it will reduce your death benefit in most cases. Okay, the suicide clause provision. The suicide clause provision states that if during the first 2 years a client commits suicide, the insurance company will not pay out the death benefit. What they will do is they will refund all of the premiums that were paid. They'll cancel the policy. Okay, it's meant to prevent people from buying insurance and then going to commit suicide immediately. Okay, now after 2 years of owning the policy, the suicide provision comes off. Okay, and the suicide will pay out just like any other claim. This applies to all life insurance policies. Literally, every single one of them works like this, no matter the company. All right. The accelerated benefit provision. This is one of my favorite topics here because I know people who have actually benefited from this. What is this? Give me 1 second, y'all. Okay, the accelerated benefit provision says that the insurance company, okay, the policy that they issued you, you can actually use that policy while you're still living. Okay, what this does is it allows the insured or the client, right, to receive part of their death benefit while they're still alive. Okay, now certain things have to happen in order for them to use that money. The most common thing that happens um, is a terminal illness. Actually, that's not the most common thing. I've never issued a benefit for a terminal illness. I've issued benefits for critical injuries and critical illnesses. But it does happen with terminal as well. It can be critical, chronic, or terminal. Okay, now, if you are diagnosed with a terminal illness, okay, now the terminal illness has special requirements, right? It'll say you have to have a lifespan projected to only be within the next 12 to 24 months. Okay. In a critical injury, they'll say, hey, you have to be unable to perform two of these six daily living activities, right? There are stipulations, but they'll tell you what has to happen in order for you to receive this benefit. Now, what happens is you can take money out of your policy, out of your death benefit, okay, to make sure that you are staying comfortable while you're still alive. Okay, you can either get it in a lump sum or payments depending on the terms of the policy, but it can help you with medical bills, living and household expenses, really anything you need during your illness. You can request an advance on your death benefit, essentially. Okay, any money that is taken out of the policy is going to be subtracted from what your beneficiaries get later. So, I've actually issued these. Okay, so one client, actually my one of my very first clients, um, her name is Jasmine. She's still alive. She loves when I talk about her story. But Jasmine, she actually um, got a policy from me in August of 2018. And in December, she went on a vacation. All right. She came home in early December. She came home like the second week of December, was unpacking her bags and had a freak accident where she like fell over, tore her ACL, tore her meniscus. It was crazy. Like, I don't even know how that happens, but she needed surgery. Okay, she was in the hospital, needed a lot of care, was unable to work. She actually ended up filing a claim, guys. Okay, we filed this claim. And December was a busy month, like holidays and whatnot. So the insurance companies were a little, backed up. But I'm proud to say that in January, okay, so the following month, Jasmine started receiving payments from her life insurance company. Okay. Guys, she started receiving payments in the amount of $12,000 per month for the next 13 months. Okay, if you do the math, she received $156,000 from her life insurance policy, all because of the accelerated benefit provision. This was money that she did not have to work for. This is money that she did not have to pay back. This is money that she was able to use to take care of her medical bills, right? She was able to hire someone to come take care of her, hire a personal chef to come cook for her. She was able to put some money away. Oh, and then come to find out, she was actually pregnant too. She didn't even know she was pregnant. She found out when she had to get surgery scheduled. And every time you get surgery, if you're a girl, they'll say, hey, come and take this pregnancy test. right? And she's literally going to get surgery, and then they're like, "Oh, we have to cancel your surgery because you're pregnant." She's like, "What?" Didn't even know. So she was able to take some of that money, save it for her daughter, and put it into another life insurance policy. It's crazy. This money, again, you don't have to pay it back. It's your death benefit that you get while you're still living. Okay, so if you, for an example, you have a $100,000 death benefit that provides for 75% accelerated benefits, you could get up to $75,000 if you're terminally ill, right? That means that the remaining benefit would go to your beneficiaries upon your passing. Guys, this is my favorite benefit. I've seen it work. That's just one of my clients. I have probably about a dozen clients that have leveraged this. This is real. How many of you guys know someone, right? Let me know in the chat. Everyone has lost someone to cancer. Everyone has lost someone to some kind of illness, right? We all know someone who's had a heart attack, stroke, something that has disabled them for a period of time. Imagine if someone like a life insurance agent like you had come to talk to them and sold them a policy like this. It's crazy the power that we have, guys. Like, we have the power to change someone's life. Not many jobs can do that, right? Not many jobs can do that. Not many ways to make, not many, I guess, professions can do that. Respect to everyone who works, but people who work at Target ain't changing lives, right? The Starbucks worker is not changing a life, right? The people who are doing our lawns, probably not changing lives, right? You guys have the power to literally help someone through their most critical times of their lives. It's so important that you guys get this license as soon as possible, y'all. Like, I cannot stress that enough. It's crazy when that happens to you, when you go to issue one of these claims, this business becomes so real. It's more than just recruits, it's more than just submitting applications. Oh, I'm running for a promotion, right? No, guys, this becomes real, y'all. I'm so excited for you guys to experience this, y'all. Okay, settlement option provisions. All right, settlement option provisions. What is a settlement option? Well, let's pretend we are all beneficiaries to someone's death benefit. All right, and you have just become a beneficiary. Someone passed away and left you a benefit. All right, now when that person passes away, the insurance company is going to send you a letter. Well, you're going to have to file a claim, right? They're not going to know, but you file a claim and they're going to send you some paperwork. Remember, I mentioned that earlier. Part of this paperwork is they're going to ask you, hey, Mr. or Mrs. Beneficiary, how would you like to receive this money? You have options. Okay, option number one, you can receive this in a lump sum. You have $1 million death benefit with your name on it. How would you like to receive this $1 million? You can say, hey, send me a check. Right? And they'll send you a check with your name on it. No taxes, no nothing. You just take your $1 million to the bank, and there you go. That's option one. Option two, you can say, I would like to receive a set amount of money until the death benefit runs out. Pay me $1,000 a month until this $1 million runs out. What's the math on that? I can't math very well. You don't need to know math to be a life insurance agent, y'all. That's 1,000 months. How many years is that? About 12, 83 years. That's crazy. That's crazy. 83 years. Whoa. So yeah, you could say, give me $1,000 a month until this money runs out, and they'll do that, right? You can also say, give me payments for the next 5 years. Okay, and they'll break up that $1 million into 5 years. Once that money runs out, or once that time is up, you don't get payments anymore, right? And then the last option is life income. This one's pretty cool. This one guarantees you, listen to this. It guarantees that you'll get paid for the rest of your life. Isn't that amazing? You'll get paid for the rest of your life, no matter what, no matter how long you live, you will get paid for the rest of your life. Okay, now this one is cool because the insurance company just turns this into an annuity. They're going to pay you forever. So the beneficiary will decide. You will decide how the money is going to be received. Okay, now check this out. Any other option outside of a lump sum, the insurance company is holding on to your money, right? They're keeping the majority of your money while they're sending you payments, whether it's like a fixed amount, fixed period, or lifetime income. They're keeping the majority of your money while you receive payments. Okay, so check this out.
But the problem is that the FLFs that you sent.
Make sure everyone's muted there. Okay, cool. Now, if they're holding on to your money, guys, what happens is that because the insurance company still has your money, they're going to go and invest it, right? They're not just going to let it sit there. Come on. They're going to go and invest that money. Now, because they're investing your money, guess what? They got to credit you interest. Okay. And as they're crediting you interest, that interest is now taxable as ordinary income. The death benefit is tax-free, but that interest is not. Okay, that interest is not tax-free. Okay, so the death benefit is tax-free. The interest is not. Okay, just keep that in mind. Okay, any questions about any of the provisions that we've covered thus far? Any questions about provisions? All right, cool. We're going to move on to exclusions, okay? And exclusions are what the policy does not cover, okay? There are exclusions in life insurance policies, and it talks about what it will not cover, okay? So, jumping right in. Some of the things that are not covered under life insurance policies, okay? Suicide within the first 2 years. We talked about that, right? During the exclusion, you only get a refund of the premium. After the exclusion period of 2 years, you get the full death benefit. A death due to illegal activity, okay, or you committing a crime, if you pass away while you're committing a crime, you will not or your beneficiaries will not receive a payout. Okay, that's messed up because you won't even know, and you're over here thinking like, "Oh, my policy's good. They're going to get paid out." No, they will not get paid out. You will get a refund even if you're passed away. Okay, some like you guys remember, maybe you guys don't. I'm dating myself here. Y'all know who Bonnie and Clyde is, right? Or who they were. They were robbing banks, died in a shootout with the police. Okay, they actually had life insurance policies. Now, prior to Bonnie and Clyde, there was no rules against, life insurance policies paying out when you died during the commission of a crime. So what happened? Their policies actually paid out their parents. Okay, it said that the policies paid out more than they ever made off with from robbing banks. And their policies only paid $1,000 a piece. It's crazy. So Bonnie and Clyde were the reason that this rule was changed. Okay, they brought about the precedent of saying, hey, if you pass away because you were committing a crime, you will not be your beneficiaries will not be receiving a death benefit. There are some policies that exclude war or military service from being eligible for payouts. Okay, so this excludes death due to war, active war, or military service hazards, and it depends by the company and also by the state. There's an aviation exclusion for non-commercial or private pilots. Okay, if the insured dies while flying a private plane, not being the passenger, but flying the private plane, the death benefit may not be paid out. Okay, so if you're someone who enjoys, aviation, you fly planes, private planes, um, this may be an exclusion on your policy. Okay, if you have a hazardous occupation or a hazardous hobby, such as scuba diving, skydiving, right? Unless it is disclosed and approved, it may not pay out. Okay, I know y'all saw that video of that girl being thrown off that bridge. Y'all seen that? She was out in I want to say she was out in Brazil, and I think it was like bungee jumping. They were supposed to attach a cord to her feet and it wasn't attached, and they just threw her off the bridge and she just landed on the ground. She didn't make it, right? So things like that, can be excluded from your life insurance policies, right? Imagine the insurance company now has to pay because somebody was negligent, right? They're not interested in that. So those things may be excluded from a life insurance policy. Okay. Here is a question that could be seen on the exam. So, if the insured dies while doing dangerous hobbies and they did not disclose it on the application, right? The insurance company has 2 years to find that mistake during the contestability period, right? Now, for example, someone named P purchases a $50,000 whole life policy in 2020. One of the questions in the application asks if P engages in scuba diving, to which P answers no. Okay. Now the policy got issued with no scuba diving exclusions. 2025, P took up some hobbies and took up scuba diving and unfortunately died in a scuba related accident this year. What will the insurance company pay the beneficiary, if anything at all? Well, the insurance company is going to pay that $50,000 minus any loans and interest. At the time of the insured's death, the policy is beyond the contestability period. So remember that contestability period lasts 2 years. After those 2 years, anything goes. As long as it wasn't something that was lied about, as long as it was not something that was omitted, anything goes. Okay. Any questions on exclusions? Exclusions is just saying, hey, this is what's not going to be covered in your policy, right? There may be different exclusions depending on the client's situation. If they do something um, that the insurance company does not like, does not agree with, they will exclude it. Okay, but uh they have to name it in the policy. Okay, writers. Oh, someone in the chat. Let me see. The last example. Yes. So check this out. P purchased a whole life policy in 2020, right? This policy is 6 years old at this time. The question on the application asked if P engages in scuba diving. Okay, that was 2020, right? P said no. Policy got issued. 5 years later, P started learning how to scuba dive. Okay, unfortunately passed away the following year due to scuba diving. The insurance company will pay this policy out because this is not an exclusion, right? It was never excluded from the policy, right? Exclusions have to be, remember that everything that matters must be in writing, right? That was the first thing we covered today. Everything that matters must be in writing. Because nothing was stated on the application that says, hey, you can't go scuba diving, there was nothing about that on the application, right? Because there was nothing about that on the application and P did not lie, at the time when P got the policy, they did not scuba dive. I don't know if P's a guy or a girl. I'm gonna say it's a guy. P did not scuba dive at the time of the application, right? So they weren't lying. They just didn't scuba dive. Now, fast forward to 2026, P was scuba diving and passed away, right? It was not excluded from their application, though, right? They were allowed to go scuba diving. It's not like the applications or the policy says, hey, if you die scuba diving, we're not going to pay it out. No, there's no mention of that. So remember, everything that matters is in writing. I hope that helps. Let me see. After a 2 year contestable period, injury or death from illegal activity is okay. It is not okay because it is already written in the policy that illegal activities are not going to be covered. So it's already an exclusion. It already says in the policy once you receive it, hey, if you pass away committing any crimes or doing any kind of illegal activities, same thing, right? The policy will not pay out. And it's not like at any point. It doesn't matter when it happens. It could happen day one. It could happen, 30, 40, 50 years down the line. Okay. Riders, this is kind of like upgrades to your policy. All right, this is walking into Verizon looking for a phone, and then they, sell you the case, the little keychain that goes on it. You got Netflix on your phone now. This is what that is. Those are riders, right? Those are upgrades that you can add to your policy, customizations. And I love this because, guys, insurance is not one size fits all. It's not, right? Everyone here has different needs. We are all very, very different. Imagine walking in somewhere and being told, yeah, we only sell one thing. You want it or not? It's crazy. You would be surprised at how many people say yes. But with writers, you can actually customize a policy that fits your needs. Okay, so let's jump in, see what they got here. Okay, there is something called a waiver of premium or a disability income benefit rider. Okay, waiver of premium or disability income. So, what this does, just like the name says, it waives your premium. Okay, if you become totally disabled, and it doesn't even have to be permanent disability, okay? So if an insured becomes totally disabled for 6 consecutive months, okay, and they cannot work, this rider will waive all future premium payments until they return to work. Okay, none of the premiums paid by the company have to be repaid. All right, so this is just saying the insurance company is going to pay for your policy while you are disabled. Pretty cool, right? None of the payments that they make actually have to be repaid to them. They're going to take care of it. You don't have to pay it back. Soapy, rider is just an upgrade. You can add upgrades to your policy, right? You're going to get a very basic policy, but you can add upgrades or benefits to it if you want to. Okay, this is one of the upgrades that is an option. Um, yeah, none of the premiums paid by the company have to be repaid and the policy stays active. Now, adding the waiver of premium to a policy, it does cost the client extra. Okay, now this also pays you more. Pretty cool, right? Everyone wins here. The client, and I've seen clients use this before. I have several clients who have used this. And they're like, and it's not that much more that they pay. It's literally a few dollars a month and it protects them, right? Because now you lost your income because you're not working, you're disabled, and your policy's still paying out or it's still active, it's still being paid. Very cool benefit. I have this on my policies, every single one of them. Okay, the payer benefit. I also have this. Okay, there's a payer benefit where the rider is typically used on juvenile policies, right? So I have children. I have two boys. I have an 18-year-old and a 9-year-old. Okay, now as the parent, if I become disabled for whatever reason, I am not required to make payments on my children's policies. Pretty cool, right? So I'm not required to make payments on my children's policies until I am recovered. Okay, so again, it begins after 6 months. The premium gets waived until the disability is over or until my child turns 21. Pretty cool benefit. The accidental death benefit or dismemberment clause rider. This just says that if the cause of death for a client is listed as accidental, the death benefit actually can double or triple. Okay, so the accidental death benefit rider can double or triple your payout should they die from an accident. Now, it doesn't actually have to be like a car accident, right? It can be any kind of accident. Now, the death must happen within 90 days of the accident. Okay, if it's after those 90 days, it no longer counts. But what happens is if a policy for $100,000 is written, right? The client has this rider on it, and they pass away from an accident, their death benefit may be doubled to 200,000 or even tripled to 300,000. If it's not accidental, it's still only going to be 100,000. All right. Children's term rider. This is pretty cool. Um, this is great for people who are like looking for extra coverage for their children, maybe looking to save a little bit of money. But this is a basically where you can cover your children under the parent's policy. Okay, so what happens is the parent gets a policy. It doesn't have to be permanent insurance, it can be term insurance as well. But what happens is that if the parent gets a policy, they have the option to add their children onto their policy as what's called a rider. And what this does is it says, hey, we will cover your child up until they're age 25. Okay. And if something happens to that child, we will pay you a death benefit. It can be 5,000, 10,000, I think up to 25,000. They're not going to ask you about the amount, but it'll provide financial support in case of a child's unexpected death. Now, when that child turns 26, they can actually convert it into a permanent policy with no proof of insurability. Parents love this because it's super, super cheap compared to getting them their own policy, um, outside of their themselves. So definitely a cool benefit. This can apply to adopted children as well. It does not just apply to your birth children. It can apply to adopted children as well. And also, like every time you have a child, um, you some companies are different. Sometimes you do have to let them know, other times you don't. But most cases it does apply to all children. Mm-mm-mm. The guaranteed insurability rider. This upgrade right here allows a policy owner to buy life insurance later on in life if they need it, right? So you can purchase more insurance later without having to prove that you're still healthy. This is pretty cool. So if a policy, and the thing is like you have to purchase the same kind of policy. So if you have a whole life policy and you want more insurance later down the road, you have to buy another whole life policy. You can buy another policy, right? But you may have to be having to provide proof. With this, you don't have to provide proof. All right. So for example, let's say you get a policy when you're 20 years old. Now you're 35 and you develop a health condition. Now, if you had this rider, you can get more coverage without having to prove you're still healthy. Pretty freaking cool. Let's see. There we go. Okay. Return of premium rider. This just means that if the policy, like if you own a policy, okay, if you own a policy and what is this? I'm so sorry, y'all. Chris Hart texted me. Hmm. I don't know what that is. Okay. If somebody owns a policy and they add this rider to their policy, okay, and what's the difference between payer and children term? Very, very different. So the payer benefit is if my like let's say that I bought a policy for my kids, right? Is it Tavia? Um, I hate to say
It's
name.
Olivia.
Tavia. Okay, Tavia. So let's say my children, right? My 9-year-old. I bought him a policy and I get sick. I'm unable, let me go back to it. I get sick, I'm unable to work. If I become disabled to the point where I can't work for, 6, 7 months, this benefit right here will pay for my child's policy while I'm disabled, right? But that's his own policy. It's not listed under mine, it's under his name, right? Like I purchased it, but he has his own policy, right? So the payer benefit just says, "Hey, Brenda, you don't have to pay this policy until you get better." Right? So the payer benefit is just for the payer to say like, "Hey, um you can take time off from paying it until you get better," right? This just allows the client to focus on recovering and not have to worry about whether their children's policy is still going to be in good standing. So that's the payer benefit. Now, the children's term rider right here, this is if I own just my own policy and I don't have one for my kids independently, right? I only own one policy, which is my own. I want to add my kid to my policy, right? Now, if I don't have the waiver of disability rider on my own policy and I get sick, my none of us will have coverage, right? Not myself, not my kids, because it's my one policy that I have, right? And if I don't have the waiver of disability, right, then I'll have to pay my policy. And if I can't pay it, my policy will be canceled, including the coverage for my children. Does that make sense?
It does. Thank you.
Yeah, absolutely. Okay, cool. Did we talk about that? Yeah, we talked about that. Okay, return of premium. Let's say I buy a policy, right? I'm 25 years old and I buy this policy for 30 years, right? Most ROPs are 30 years. I'm 25 years old. I buy this policy. Fast forward to the future. I'm now 55 years old. I'm still alive and I feel better than ever. I'm probably not passing away for another 20 years, but I just spent all this money on paying this policy for 30 years. Now what? Well, if I had an ROP policy, a return of premium, right, I could actually get all my money back. So if the policyholder outlives the term policy, this rider, it will actually refund all of the premiums that I paid over the years tax free. I can either use the death benefit if I pass away during those 30 years, right? If I don't pass away during those 30 years, I will get all of my money back. I win either way. Guys, how many people would definitely buy life insurance if they knew they were going to get a refund back? You're either going to get a refund or somebody's going to get paid out. Crazy, right? So for example, if you buy a 20-year policy and you pay $50 a month. If you're still alive when those 20 years are up, you get back your $50 times 12 months, right? Per year times 20 years, you get back $12,000. It's not a bad deal. Sign me up. Okay. Long-term care. This is what I talked about earlier. The accelerated benefits, same thing. Okay, this lets you use a portion of your life insurance death benefit while you're still alive to pay for long-term care services like nursing home, right? In-home care, assisted living. A long-term care rider is triggered by the insured's ability to perform two or more daily living activities. All right, so if you are unable to eat on your own, meaning like take a fork, put it in your mouth, right? You're unable to do that. If you are unable to dress yourself, okay, if you need help getting dressed, if you need help using the bathroom, right? Maybe you can't get up from your bed, or that's transferring too. Maybe you're like, hey, I can't like, sit down on the toilet. I need help, right? Maybe you can't, or yeah, taking a bath. You can't shower on your own, right? You need help showering. You can't use the bathroom on your own. You need help walking. Maybe you can't walk at all, right? That was my friend. That was Jasmine. She couldn't walk. She couldn't do none of this. You can't transfer from a wheelchair to a bed, right? If you can't do two of these, you qualify for the long-term care, right? It helps cover expensive care without having to buy a separate long-term care policy. If your policy is $250,000 in coverage and you use $100,000 for nursing home care, when you pass away, your beneficiaries receive the remaining $150,000. What was it? Jessica, you know the cool thing about this presentation? You already have it. You already have this presentation. If you log into your Bamboo and you go to Quest, it will be in under courses. I'll show you guys how to access it before the call's over. The term conversion writer, term conversion writer. Okay. Let's say again, you're 20 years old, right? Or there's an example here of 30 years old. You decide to buy life insurance. You're like, you know what? Let me be responsible. Let me get this, this life insurance. And you buy a 20-year policy, right? Now, 15 years in, you're like, you know what? Still pretty healthy. I kind of want this permanent policy, right? This allows the policyholder to convert their term life insurance policy into something permanent. Okay, you don't have to provide proof that you're still healthy. It's pretty cool. Now, this usually only goes for a specific period of time, depending on your age. Who is calling me from this number? Yeah, so it goes for a certain period of time, depending on your age. Uh, I don't know who that is. It's someone from PHP, from the company, but I don't know. Okay. Yeah, so it provides you a certain period of time where you can choose to convert it. If you don't convert it, then your policy will expire, right? But this allows you to convert your term from something temporary into something permanent if you choose to. Great option to have if you're like, hey, you know what? I want to have the option of maybe having my permanent coverage later. Guys, this right here, it comes on most term policies for free. You can convert it if you choose to. Now, it does stop at a certain age, depending on your age, depending on what age you got your policy. It may be longer on some policies than others, but it essentially just lets you convert your policy from something temporary to something permanent. All right. Okay. Any questions about anything we've talked about up until now? Cool. Um, Maxwell, are you still on the call? I know he had some questions earlier. I don't see him. All right, we'll continue. Okay, cool. This is the purchase of life insurance cycle. Okay, this is the cycle for purchasing life insurance. Um, Pretty straightforward, right? You buy the policy, right? As the policy owner, you are going to be paying the premium to the insurance company. Okay, so you're going to make your payment. Once we get our license, become agents, can we become our own clients and represent ourselves? Terrence, you absolutely can, but here's the problem with that. When somebody passes away, the client is sent or I'm sorry, the beneficiary is sent a report to fill out. The agent is also sent a report to fill out. If you are your own agent, who will fill out your report? Right? Doesn't make sense. So I don't advise that you become your own client because how? Right? So I definitely suggest that whoever recruited you, you talk to them, right? You go up to your upline, whoever that may be, and just say, hey, you know what? I want some life insurance. Can you help me out? That way, your upline can be responsible should you pass away, God forbid, right? But what happens is if you, let's say your upline passes away before you, right? Then your case will be reassigned to somebody else. So ultimately, someone will be there to fill out your report. If you are your agent, it's going to be kind of hard for that to happen, right? So I don't advise that. Now, um, if you don't have insurance, like I said, definitely go talk to your upline. Whoever recruited you, they got you. They got your back. It is so cold in my room. I feel like I'm getting sick because I'm right under this air vent. Okay, so yeah, purchase of life insurance, pretty straightforward. You as the policy owner, you gotta pay the insurance company, y'all. If you don't pay them, you ain't got coverage, right? So make sure you pay them. Now, the insurance company is gonna issue the policy to the policy owner. They're also gonna be the ones that issue the death benefit to the beneficiary, right? And of course, the beneficiary is gonna be the one that receives the death benefit. It's really straightforward, y'all. That's how it goes. Um, Okay, I can spend an hour on this slide, literally. Might be where we end right here. Okay. Sorry, y'all. Somebody was calling me and it's from the company and I don't know who it is. I'm going to text them. Hello. Okay. So when you are as the agent, right? As the agent, it is your responsibility to meet with clients, right? During the appointment, show them the illustration, which is just another word for quote. Illustration is just a fancy way of saying this is a quote, okay? Now, let's say your client's like, you know what, I'm interested. I want this policy. Okay, you're gonna write the policy up and you're gonna provide them, once you submit the policy, you're gonna provide them with what's called a buyer's guide. And a buyer's guide just tells them all about the insurance policy they just got, right? Tells them about the company, gives them all kinds of good information. Okay, you're also gonna provide them with a policy summary. Because how many times have you guys sat with someone trying to sell you something and you forgot what they had to say, right? I know I have. Anytime someone sells me something, whether it's a car, a water dispenser, it don't matter. Security cameras, it does not matter what it is. I will guaranteed forget, right? So give them a policy summary so they remember. Okay. Now, guys, get this, all right? This may be news to some of you guys. You guys are what's called field underwriters. Okay, you are a field underwriter. Okay. Now, a field underwriter, it is your job to advocate for the insurance company. It is also your job to advocate for your client. You're basically the middleman here, right? And it's your job to determine whether your client is a good fit for the insurance company. Okay. It's also your job to determine whether the company is a good fit for your client, right? So, you guys will learn all this. Don't feel like, oh, damn, I got to learn all this. No, 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 no. Like, as time goes on, which is why I always encourage people, like, run as many field training appointments as possible, right? Your upline is literally the Michael Jordan of your team, right? Go to your upline as much as you can. Trust me, even myself at my level, being here 8 years, I still go to Chris, right? Chris Hart is my direct upline. I still go to him. I'm his number one and I still go to him for questions like, hey, what do you think is best for this? Like, trust me, they are your MVP. Go to them as much as possible because they have your best interest. Okay. So if you're unsure of like what's best for this client, what should I do in this case? Trust me, they got your back. Okay. Now, once you determine what's best, right, it's your job to make sure that your client is a good fit for the company. Right. Now, how do you do that? Okay. There's going to be several questions on this application, okay? And these questions got to be answered accurately, right? And if you see, guys, that an application is being answered accurately, but some of these are red flags, it's sometimes it's wise to not even submit the application and just call a carrier, right? Sometimes it's best to call the carrier because it may not work out for that client, right? It may not work out for that client. You don't want to get their hopes up and then you can't even get them coverage. So, unpopular opinion here, not even opinion, but like I guess this is kind of like this is always kind of shocking to people when I say it. But it is the insurance company's job to judge you, right? As a client. It is literally your job to judge you and to discriminate. I know it sounds crazy, trust me, but hear me out, okay? If insurance companies do not discriminate and they just take everyone on as a client, they're taking on a lot of risk, right? And the more risk they take on, the more expensive it gets for the insurance company to do business. You got a question? I don't want to mispronounce your name. Indea?
Yes, ma'am.
Indea. What's your question?
What is considered red flag, like common red flag?
Ooh, I'm gonna cover that. Yeah, we're gonna go over that. Okay, cool.
Have
So
a
yeah.
lot
Oh,
of
David, did you
child
have a
and
question?
sex crimes in this county. And
I think she just muted herself. Okay. So, yeah, guys, it's the insurance company's job to judge you and to discriminate. All right? Here's how. All right? This is going to answer your question, Adea. Okay. So, some things that are red flags to the insurance company, right? Let's say that your client is filling out this application with you and you start asking them questions. Hey, Mr. or Mrs. Client, tell me a little bit about, your and there'll be specific questions. In the past 5 years, have you ever done X, Y, and Z? Right? In the past 10 years, have you ever X, Y, and Z? And there'll be questions like, have you ever been convicted of a crime? Have you ever been arrested? Have you ever been convicted of a DUI? Have you ever been incarcerated? Are you currently on probation or parole? It'll ask questions like that. All right. It'll ask medical questions. It'll ask questions like, do you currently have any of the following illnesses or disorders? And it'll ask about mental health. It'll ask about your actual health. It'll ask about um, everything. Do you smoke? Do you drink? Do you have any diabetes? Any, um, high cholesterol, high blood pressure? Do you have cancer? Do you have irregular heartbeats? Have you ever had any tumors? Have you ever had like things that I've never even heard of? Things that I cannot pronounce, y'all. Those are red flags, okay? So if the client says, "Yeah, I'm on parole right now." And yeah, I have diabetes and high blood pressure and it's not controlled. I also recently got diagnosed with cancer. Guys, those are all red flags, right? Things like that, that the insurance company, remember, it's their job to judge and discriminate. They don't want people that bring too much risk, right? And it is your job as a field underwriter to determine, yeah, this client's kind of risky, right? Or, you know what, this client doesn't present too much risk. Remember, you're a field underwriter, so you determine whether or not this client is too risky. Okay. Now, as the client is answering these questions, okay, the insurance company looks and says, okay, we're going to rate them, right? They're going to rate you. And based on the rating you receive, that will determine whether or not you're going to get coverage. All right. Now, here's the things that they look at. So number one, they're looking at the MIB, which is it's not the Men in Black, it's the Medical Information Bureau. Okay, the Medical Information Bureau, it's literally a bureau of medical information. It's just what it sounds like. And they collect information on any time you've ever been hospitalized. If you've been to a doctor and that doctor has collected your personal information, like your name, date of birth, social, insurance card, all of your information gets reported to the MIB. You're on a medication, they know about it. You've been diagnosed with something, they know about it. Temporary, permanent, whatever it may be, you have a diagnosis, they know. And guess who also knows? The insurance company now knows, right? They know your most current height and weight, right? They know all about your health. They know your BMI. Now they also look into your consumer report. DUIs, accidents, credit. Yes, even credit can be considered risky to the insurance companies. Your family history. Yes, they ask, are your parents living? If they're not, what age did they pass away and how did they pass away? They want to know. They're very, very nosy, y'all. Very, very nosy. Right? So they're gonna judge you. They're gonna discriminate. Someone who's too risky, they're not interested in doing business with those people. All right. Somebody of regular risk, they're like, okay, we can take them on. Right. They're also going to look at insurable interest. Why are you buying insurance for this person? Right. Or who is buying the insurance? Right. So if I say, you know what, Indea, I'm gonna buy insurance on her. I don't know her, right? I don't know her. I know her name. I see her picture. That's all I know. But if I wanted to buy insurance on her, I would not be allowed to. Why? She's a stranger to me, and me buying insurance on strangers is considered illegal activity, right? So there must be some kind of insurable interest. Now, how do you establish insurable interest? There must be either a financial or an emotional tie to this person. Okay, a financial or an emotional tie. So, emotional, my child, my parent, my spouse, maybe my siblings, right? Those are emotional ties. Financial, it can be my business partner, right? If I own a business, right? Me and Tavia own a bakery and I pass away, now Tavia is left to make decisions with a 9-year-old about what color sprinkles they're going to buy. She don't want to do that because my 9-year-old will be annoying about it. I promise you. So imagine our bakery had bought a life insurance policy on me before I passed away, right? And when I passed away, the business now benefited from $1 million policy. Tavia can take that money and say, hey, Brenda's kids, get out of my face. Here's the money for your mom's half of the business, right? So if there's a financial reason, while you were tied to someone, you can buy life insurance on them, right? So it doesn't just have to be like, oh, we're family, that's my husband, that's my wife, that's my kids, my parents, my siblings. No, 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 it can be business as well. Now, after the
I have a
policy,
question about that.
yeah, let's hear it.
I'm sorry. I should have wrote this in the chat. I'm sorry. I
No, you're
apologize.
fine. No, no, no. This is what this call is for. What's the question?
And then hearing my dog in the background.
You're
Can you
good.
buy policies on other people, like family members, like your mom, or
Yeah,
like someone
absolutely.
who used to be a spouse? You can have
Yes,
policies on them
ma'am.
as long as you have the. Do they have to sign off?
They do. Great question. So I'll give you examples. Okay. I own policies on both my parents. Okay. They're my parents. I have policies on them because one day they will pass away and they will have, things that are left behind that are unsettled. And I don't want that to fall on me. Right. I own a policy on my brother. Okay. I bought it when he was younger. He had not, he was just like, I don't want insurance. Well, guess what? Now he's becoming a dad. So now he needs insurance. His wife is the beneficiary, but I pay for it. I also have insurance on my son's dad. We are not married. We never were. The only thing we have in common is that we share a child, right? I am the owner of that policy. He knows about it. He had to sign for it. When I bought that policy, I had to have his social. I had to know what doctor he goes to, right? I had to know all of his most recent and current information. On top of that, he actually had to sign. So, when that policy was written, even though we live in different states, he lives in California and I live in Maryland. An email request or I'm sorry, a signature request was emailed to him. He had to sign it, and only then was the policy sent to the carrier to even be considered. The policy was issued. I pay for it. I'm the beneficiary. Should something happen to him, I will receive a benefit. So you can absolutely own policies on other people so long as you can prove there is some kind of insurable interest. What is the reason that you want insurance on this person? Right? If you can prove it, you can buy insurance on someone and they must sign off on it. So they have to be willing participants. They have to be aware as well. Great question, Jessica.
Okay, thank you.
Yeah. Okay, cool. Premium determination. So your premium will be determined, right? They'll say, "Hey, you've been approved as applied for," right? Maybe you were quoted $50 a month for $100,000 in coverage. If you were approved as applied for, you'll pay your $50 a month. They may say, "Hey, you know what? You're approved, but you're a little risky. We're going to charge you a little bit extra." All right. So you may have to pay $70 for $100,000 in coverage, right? Maybe the insurance company came back and said, "Dang, Anthony, you're actually super healthy. You don't have any risk. We're actually going to charge you less because you don't present as much risk as the average person. We're going to charge you $30 a month for $100,000 in coverage." All right. Now, after the insurance company comes back and says you're approved, you have to determine whether or not you want the policy. Okay, you have to determine whether or not you want it. If you want it, there's no negotiating. You can't say, "You know what? I don't want to pay $70. I still want to pay 50 for my 100K." They're going to say, "No, you want to pay 50, you're only getting 80K," right? They're the only ones who can make changes to the policy. You can't come back and say, "No, I don't want to pay that. I want to pay less, or I want more coverage for the same amount." No, no, no. There's no negotiating with the insurance company. You either take it or leave it. This is a unilateral contract as well. They're the only ones who are going to be held liable in this contract. So if they, for whatever reason, don't want to pay it, they can't do that. But if you don't want to pay your policy, you can do that, right? You can say, "I don't want to pay it," and don't pay it. The insurance company's not going to send you, a bill collector. They're not going to come knocking on your door. They're not going to come repo your insurance policy. You just stop paying it. But the insurance company cannot say, "We just don't want to pay." They have to have a very valid reason for not paying your policy, right? If they don't, for no reason, then they will be held legally responsible. Now, once that policy is issued and enforced, that policy must be delivered to the client. Guys, don't get lazy, right? Deliver that policy because it is not technically, y'all, if the policy is not signed and returned, right? There's a form that needs to be signed and returned. If it is not signed and returned, it is not considered accepted. Imagine how pissed off someone's family is going to be if, because, you just got kind of lazy, you're like, I've already been paid for the policy. They don't need to sign it. They don't need a copy of their policy. If they do not sign it as received, the insurance company come back and say, no, the policy, you can't file a claim because we never received your signature. Someone's family's gonna be pissed off. Not worth it, y'all. Not worth it. All right. Any questions about any of this? I'm gonna stop here because I know that let me see. I think Maxwell's still on the call. Yeah, he is. I know Maxwell had questions, and if anybody else has questions.
I
So
have a question for you.
yes, talk to me.
If you get a policy, um, and you feel like you want to do the child writer portion, and you
Mhm.
have two kids, and you are able to add one kid to a policy, but the other kid might have some medical things going on. It might be difficult to add them initially. Is there a way you can go back around? Because this is my own situation, so this is what I was told. So I'm curious what you would say. But is
So
there a way you can go back around and add the other child once you get approved for yourself and one child?
so let me see if I understand this. You- Was your child already declined for coverage for some reason?
Not initially, but I know that in my mind, I tell the insurance agent up front, these are the things, so I'm not really sure that the child will get approved. So
Gotcha. Okay.
knowing that up front, they're like, okay, well, let's strategize before we submit this, and maybe we can do it this way. We'll add you and one child, and then later on come back after the policy is approved and possibly add the child to
I see
that.
what you
Is
mean.
that a thing that can happen or no?
No, so the insurance companies typically want to know about the children's medical history just in case there is something that presents too much risk to them. Um, like God forbid, right? Hopefully this is not your situation or anyone's situation, but if there is a child, like let's say a client gets a policy and they have a child that is terminally ill, the insurance companies, like, they want to know about the children too. So they'll ask questions before issuing that children's term rider because the insurance company doesn't want to take on the risk of saying, hey, we'll insure your kids, and not knowing whether or not the children are even eligible for coverage. Does that make sense? So they do ask questions. What I would do if I was in your case, Jessica, is I would specifically look into, like list out all the conditions that the child might have and then reference what's called an underwriting guide. Every company has an underwriting guide, which is essentially it's a book that tells you exactly what they will and will not accept. You can also reach out to the underwriter directly. A lot of our agents have good relationships with underwriters of specific companies, and you can say, "Hey, this is my client's situation." Right? They have a child of this age, they present with these conditions. Would this child be considered for a children's term rider, or can they get their own independent policy? I always recommend getting them their own independent policy if possible, just because you overcome the hurdles early on of maybe later they can't get coverage, right? So always try to aim for their own personal policy if financially feasible, right? So I would say do that, Jessica. Ask the agent to reference the underwriting guide. If you're in the SOS office, you can always reach out to me as well. I have a lot of knowledge as far as like what's accepted and what's not by certain carriers, what carriers are best for some things versus others. Um, Especially like in kids too. I've had clients that have children that are uninsurable, and we just always reach out to the carrier and find out, hey, what are you willing to accept? What are you not willing to accept? So definitely reach out to your agent and see, if you can reference the underwriting guide.
Okay. And Brenda, I am in the SOS office, so I'll check in with you and touch bases at
Yeah,
some
for
point.
sure. Yeah, let me know.
Thank you.
Absolutely. Maxwell, I know you had some questions earlier.
I still do.
Awesome. What's going on?
So, I was doing some independent research, to make sure I was staying up to date and staying invested in my education for insurance and stuff, all that good stuff. Um, and I wanted to know what type of insurance company we're like closer aligned to. Like, are we a collection of independent contractors, or are we more of like a captive company, or what that looks like?
So we are a captive company in the
Okay.
sense that we only allow our agents to represent the companies that we work with when it comes to life insurance, right? So, for example, if I go and recruit an agent from AAA or from a car insurance company, let's say, right? They only sell auto insurance. If I recruit an auto insurance agent, they can continue to sell auto insurance wherever they work, right? As long as they don't sell life insurance at that company, as long as that company does not offer life insurance, right? Let's say it's
Okay.
like, I don't know, ABC car insurance company. I don't know, one company that only offers car insurance. I can recruit them to PHP and have them sell life insurance at PHP and car insurance at ABC Insurance.
Yeah. But they can't sell car insurance for PHP.
We don't sell car insurance.
Yeah.
Yeah, so we don't sell car insurance, so they're safe in that sense. And, ABC car insurance doesn't sell life insurance. So we are captive in the sense that, hey, if I recruit someone from State Farm who sells life insurance, they can't work here because State Farm sells life insurance and it's a conflict of interest. Does that make sense?
Yeah.
So you can't go and like because if you're here and you're there, who's to say that you won't take clients from here to there? Right?
Yeah.
You can only sell here or you can only sell there. And most companies are that way. You can't represent multiple companies selling the same product.
And then okay. So and then what's our clientele looking like? Do we get all of our own clients ourselves, or is there some sort of avenue for that for
What organization are you working with?
I'm working with PHP.
No, but like what organization? Like everyone here is with PHP, but like who recruited you?
Oh, Kevin
Kevin who?
Smith.
This like what I guess what office are you working out of? What state are you in? That might help a little bit.
So I'm NPA, but I was recruited by Kevin Smith the second, I'm pretty sure.
Okay. Yeah, so you work with SOS.
Okay.
And SOS has a system where we teach you how to go and find clients. We have something called CFT Academy. Definitely talk to Kevin about it. He is one of our CFTs. And he can teach you how to find clients. So you are not provided clients, you must go find clients.
Okay.
Mhm.
And then do we do chargebacks?
What do you mean, do we do chargebacks? Like, do we charge people back?
Um, so like if they want to cancel or something,
Do you get
do we
chargebacks? Absolutely.
yeah,
Yep. Any client that does not pay what's called a target premium will result in you getting charged back your commission. The insurance company, in good faith, advances you 12 months of premium, right? Should they not pay those 12 months or the target premium's premium worth, then you will be charged back the commission that you were not entitled to.
for what is that, like 10 months?
It just depends on how long the client didn't pay for.
Okay.
So if the client doesn't pay for 2 months, then you will be charged back 2 months of commissions. If the client never pays, you will get charged back your entire commission. Make sense?
Yeah.
Yes, you'll just get charged back whatever premium they did not pay. None of this will be on your guys' test.
Yeah.
So you don't need to know any of that. Good question though. What else?
Um, I mean, as of right now, just those. The terminology for term life is kind of confusing, but I'm trying to write it in my notes in a way that makes sense to me. So,
What do you mean? Like
um,
the different types of term?
like credit life insurance, was talking about credit life, but then I was also talking about how it can be used in like group life insurance or like banking insurance, and it was kind of like a lot for me to kind of wrap my head around as I was
Yeah, credit life insurance is just a type of insurance that pays off a specific debt if that owner passes away before the loan is paid off, right? So like if I have a car loan, right, for I don't know, $80,000, right? I can buy life insurance with that loan, right? Just to make sure that if I die and I still owe that car loan, it'll pay it off. It's not very common. Um, but yeah, in this case, the beneficiary would be like the lender, right? So they're paid off whatever balance is left. And what this does is it allows the assets to remain with the family instead of, having to go back to wherever they came from, I guess.
okay.
Yeah. All right, so I do have another call that I have to hop on. Um, so I hope you guys got some value. This call will be run back again tomorrow. It actually starts at right now, tomorrow though. So like whatever time it is where you're at right now, it's 8:06 where I'm at. If it may be 5:06, 7:06, 8, wherever you're at right now, the call will be happening right now tomorrow. All right. So whoever sent you this link, get the link from them for tomorrow because it's different than tonight's. But yeah, guys, I'll be back here on Saturday as well, Saturday morning at 8 a.m. Eastern time. That might be 5 a.m. Pacific. I used to get on calls that early, all right? But definitely come back, y'all. If you don't have a test scheduled yet, reach out to your marketing director, reach out to your licensing coordinator, get a test scheduled before the end of the month. I'm telling y'all gonna see me traveling. I don't want to, be the only one. Get your
Thank
license.
you, Brenda. Thank you.
Absolutely.
Thank
Hope you
you,
guys have a
Brenda.
great one. Bye, guys.
I'm